Investing in the stock market and real estate are both popular and well-known ways of building long-term wealth. Depending on your financial goals, your risk tolerance, and your preferences, both can be good options for having a secure financial future, though they have differing benefits and risks. Because real estate is a leveraged asset, there are those like Robert Kiyosaki who would advise that real estate is not an investment, but rather solely a liability. While it is true that real estate is often a leveraged asset, there are benefits that this characterization ignores. This doesn't take into account the fact that real estate appreciates in value, builds equity, and yields tax incentives even if there are associated maintenance costs. The stock market is one of the most liquid investments because of its wide variety of options. It's considered to be one of the most diversified investment vehicles. By investing in a variety of stocks, mutual funds, or ETFs, exchange-traded funds, investors can spread out their risk across many different areas and be less exposed to downturns in any one sector. Because of the increased liquidity, investors can make changes to their portfolio quickly without incurring a large cost. The stock market is also known for its potential to generate greater returns over time, even if recent housing market events have been big, though these gains can be offset by periods of volatility. Generally speaking, real estate tends to be stable and less volatile. Real estate is a more static form of investment, but it can also offer greater potential for returns compared to the stock market. If you look at the recent past few years through the pandemic, that would be one of those moments in time. Real estate investments tend to be much more geographically localized and involve a higher level of commitment. Investing can take the form of purchasing residential or commercial real estate, flipping houses, or purchasing in a real estate investment trust or REIT. Real estate also tends to be more expensive to enter than the stock market, since there are upfront costs associated with buying a property and the risk of the investment is more localized. A benefit of long-term real estate investment is that it's hard to beat the fact that when the property is almost paid off, a cash-out refinance is a tax-free event. That can equate to tens of thousands of dollars. For those seeking a balanced approach to investing, a combination of both stock market and real estate investing could make for an ideal long-term strategy. With an appropriate mix of investments, investors can be well diversified across different types of assets and more insulated from market volatility. Additionally, the supplemental income that can be generated from investments in both areas can be used to finance further investments or to cover costs of living. Ultimately, deciding which investment tool is best should be based on an individual's risk profile, financial goals, and available capital. The stock market and real estate both offer many advantages, but investors should be carefully considering their own specific situation prior to committing the funds. By researching the various investment options and understanding the potential risks and rewards, any investor can confidently take advantage of these two powerful investment tools and secure their financial future. Always remember to employ a competent CPA to ensure that you are investing efficiently and within the scope of the law. If you've been thinking about selling your home or getting into your next home and you have questions, I would love to hear from you. It's been so much fun to talk to you and help you get where you want to go with the best possible information available. Reach out to me anytime. I love hearing from you. Thank you so much.